Are you guys tired of talking about inflation and higher mortgage rates? I certainly am. But it's part of my job, and I love sharing information and giving clients and those people watching this video today information about what to do with the real estate that they own and what sort of strategies we're seeing in our office and recommending in our office as interest rates continue to be high. So I'm actually going to let somebody else talk about high interest rates. One of my favorite economists is Benjamin Tal with CIBC World Markets. And at the bottom of this video, I've included a link so that you can hear him talk a little bit about what the forecast is for interest rates. But just in a nutshell, I am talking to you right now about a week before the Bank of Canada is going to make another rate announcement. So on October the 25th. And, regardless of whether or not they keep the overnight lending rate the same or increase it, what I think we should be looking for is what's going to happen after that. And what the economists are saying is that the Bank of Canada is probably finished its quantitative easing because we actually saw the consumer price index come down a bit. And so again, however, we're not sure how the war in Israel is going to sort of take shape. So that might change things. So we're just living in a world of uncertainty. One of the opportunities, though, for people whose mortgages are coming up for renewal is we're having a lot more clients have conversations about a very unique product called the Manulife One. And now I don't usually talk about mortgage products, but this is a really interesting tool because it allows people to manage the cash flow within their family or a cash flow within the rental property, but also helps them access equity in their home if they need it or access equity in their rental properties or or if they need to relax payments because of cash flow, it changes in jobs. So, if you are interested in learning more about that, even if your mortgage isn't coming up for renewal, please use the link below to schedule a 30-minute online appointment, and I can take you through that scenario. If you are coming up for a mortgage renewal within the next 6 months, one of the recommendations that we are making is please be sure to contact our office. We'll get an updated mortgage application from you and income docs. And what we can do is we can secure an interest rate. So if interest rates do go down, we normally track that at our office and we lower the rates as they do come down so we can sort of be ahead of the curve. But just in case, again, there's a lot of global uncertainty. If the rates do go up, we have that lower rate secured for you. And again, the sort of the time window is about 6 months before your mortgage is coming up for renewal, is what we recommend. The other message I wanted to give to you today is I've had a lot of people talk a little bit about shorter term mortgages, like 2 or 3 year fixed rate terms. But right now, those short terms are quite high. And we can actually, if your house is under 1 million in value, and is under 1 million in value, you're actually going to be looking at a fairly decent interest rate on a variable rate mortgage. So the interest rate would be about prime minus 0.9%. Today's prime rate is 7.2. And so again, if you're thinking about choosing a shorter term mortgage, we're recommending a variable rate mortgage because when the current rate is lower on a variable rate mortgage, but as the rates come down, and they likely will come down in the next 12 to 18 months. So again, not anytime soon, you'll realize that effect. Whereas if you choose a shorter fixed rate term, you won't see that same effect on your mortgage payments and your interest rate. So just a little bit of information for you. As I said, if you'd like to schedule something with me, I'm happy to do that. Just use the link below and we can go through a scenario for you, or you can just pick my brain. Have a great day and stay in touch.